the topic for tonight is cash flow versus capital growth. Capital growth, hands down, all the time. That's playing the long game. Cash flow is something that you probably will try and work out early on, and it's something that you will try and have a little bit of help with. It might be getting a loan or servicing a loan. So you will be focused a little bit on cash flow, but that is the shorter game. Some of the best properties investments that I've made, some of the best properties that I've seen people, flip or make money out of, have had some of the worst yields or been, pretty ugly. So in financially in that way. So, but they've had the best result at the end. So my view is the cash flow is a short-term pain. The cash flow, capital gain, is the long-term gain. So look, at the end of the day, I would be looking for properties that you're going to make a capital gain out of. If cash flow is something that's a problem, you can always look to, say for instance you're looking to buy your first home and you're looking to buy that and your cash flows are problems. So let's look at that. You might look at renting, a room out, or you might look to Airbnb, one of your rooms or the whole property. So that can also help with your cash flow to start with. The further out of town, the better the yields, I find. And look, if that's what you're looking for and that's your property goal, that might be your best option. But I can tell you the capital gain is going to be best suited for the inner city property. And if you're looking, for 7 or 8% returns in residential, I'm talking, you're just not going to find it. And if you're looking for a big parcel of land, you might necessarily get a higher amount of rent in that. So look, I think capital growth is something that you should be looking for. I think, it also allows you for the cash flow point of things, it also allows you to, for saving and, to sacrifice, a holiday or, I'm saying that here while I'm on, a bit of a break at the moment, but, sacrifice, maybe that car, or sacrifice, eating out for lunch every day or breakfast every day. So sacrificing that can make, that capital gain in the end is really where you're going to find your wealth and really where you're going to find your property goals. So, so the short game approach is the cash flow, capital growth is the long game. And, property, as I've stated, is a long game. You've got to be patient. You've got to make sure you buy right. You've got to make sure you're making the right decision. But you've got to be in the game too. So you've got to take those risks. I talk about it a lot, taking risk. Well, the biggest risk is not taking a risk at all. So, so I think, as long as you've got that ahead and you know where the finished product, say you're buying an unrenovated property, know what your ins and outs are. We call them transitional costs. Know what your commission's going to be when you're paying the agent. Know what your stamp duty is going to be. Know what your holding costs are going to be, and make sure you're in with your builder, or, if you are going to flip that home in 12 months, make sure you know exactly what the costs are. But in between, your cash flow will be affected. So, guys, capital growth is the way to go. Cash flow is a short way. The only other thing I was thinking about, when this topic does get raised a bit, look, guys, if you are the older people, like, my parents' age, or if you're in the 60s, 70s, maybe looking at retiring, a cash flow investment would be important for you. You probably wouldn't be looking to do, a really risky play or looking for that capital growth, because you probably would have done that a long time ago. So that's probably the only time I can see the cash flow that would be important. I do sell to a lot of retirees or people that are looking to not, work as much as they used to, and they may look to buy a block of units that returns a great return. So, they will maybe get the capital growth as well, but, there's not very many of them at the inner city where I work. So, the further out of town, but again, if your strategy is to buy 10 or 15 properties over 10 years, and you want to get a great return, you may look further out where you may buy a house for $450,000 and rent for $450 a week, or even more. So there's sort of the plays. But guys, I'll leave it there. I think this is a topic that gets raised time and time again. I would be going the capital growth over the cash flow. I did look at it when I was younger and to get into the game. you just have to make those sacrifices, and those sacrifices have to come out of your back pocket. Because if you just go for something based on what it's going to return you, you could be sitting on the sidelines for a while. And once you build up your equity, and once you build up all your your equity to put into the deal, so after you've done 2 or 3, you'll find that your cash flow problems will be less because you've actually made money on your first couple of deals.